Hello everyone, we are Group 6 and we will be presenting our initial public offering case on Etsy. Our presenters will be Lucine Patatanyan, Tatevik Avetissian, Elena Redko, and Adina Russo. Hi, I'm Lucine and I will be discussing the company description, reasons for the initial public offering or IPO, and use of proceeds. Etsy was founded in 2005 in a loft in Brooklyn, New York. Etsy is a peer-to-peer e-commerce website focused on handmade or vintage items and supplies, as well as unique factory manufactured items. These items cover a wide range, including art, photography, clothing, jewelry, food, bath and beauty products, quilts, knickknacks, and toys. In April of 2015, the IPO in common stock was listed on the NASDAQ Global Select Market under the symbol ETSY. The company's valuation was $1.8 billion and raised $237 million in IPO proceeds. However, less than a month later, Etsy stock dropped more than 8%. The company's mission is to build a human and community-centric global and local marketplace. Etsy is committed to using the power of business to create a better world through their platform. The guiding principles that are the core to their mission include: make it easy to find and buy goods from real people every day on any platform, online or offline, anywhere in the world. Help creative entrepreneurs start, reasonably scale, and enjoy their businesses with Etsy. Communicate the power of human connection whenever anyone experiences Etsy. Etsy operates a marketplace where people around the world connect, both online and offline, to make, sell, and buy unique goods. As of December 31st, 2015, through their innovative technology-based platform, they have connected a community of 1.6 million active Etsy sellers and 24 million active Etsy buyers in nearly every country in the world. The Etsy economy. The Etsy economy values and honors the people who design and make goods. It is transparent about the way they are made and connects the people who make, sell, and buy them. It is an economy in which creative entrepreneurs find meaningful work in both global and local markets for their goods. Etsy's business model is based on shared success. Etsy makes money when Etsy sellers make money. In 2015, Etsy sellers generated gross merchandise sales, or GMS, of $2.4 billion, of which approximately 43% came from purchases made on mobile devices. They are a global company, and 29.8% of their 2015 GMS came from an Etsy seller or Etsy buyer outside of the United States. Revenue is generated from a mix of marketplace activities and the services provided to Etsy sellers to help them create and grow their businesses. Marketplace revenue is made up of two components: the 20-cent listing fee that an Etsy seller pays for each item that is listed, and the 3.5% transaction fee that is paid for each completed transaction. Seller services revenue includes the fees the sellers pay Etsy for services, which include promote listings, ad service for prominent placement and on-site search results, direct checkout, payment processing servicing, and shipping labels. Other revenue includes the fees received from third-party payment processors. Etsy plans to continue connecting creative entrepreneurs, thoughtful consumers, and responsible manufacturers, and expanding the impact of their platform through the following key strategies. Make Etsy an everyday experience. Emphasis is placed on relationships, connecting creative entrepreneurs to thoughtful consumers around the world, and continually striving to make those connections a daily habit for their members. Build local marketplaces globally. The Etsy vision is global and local. They plan to invest in local marketing and content and local payment and shipping solutions in countries around the world. Etsy believes their locally focused work will broaden the reach of their global platform. Offer high-impact seller services. Seller services help an Etsy seller spend more time on the pleasures of their craft and less time on the administrative aspects of the business. Etsy intends to enhance existing seller services, extend their geographic reach, and introduce new ones. Expand the Etsy economy. Etsy intends to fulfill their mission to reimagine commerce by expanding the impact of their platform beyond their community. For example, they intend to further develop their manufacturing program, their strategic partnerships, and their public-private endeavors to bring the benefit of the Etsy economy to more people and more communities. Invest in marketing. The rapid growth of their marketplace is a testament to their compelling proposition for Etsy sellers and Etsy buyers. Etsy sellers and Etsy buyers have been their best marketers, sharing their positive experiences with their own communities. Even so, Etsy plans to increase their marketing, spending on traditional and online media to increase awareness of their brand and attract additional members to their ecosystem. The principal purposes of the IPO are to increase visibility, create a public market for their common stock, and facilitate future access to the public equity markets. Their growth depends on the ability to attract and retain an active community of Etsy sellers and Etsy buyers. In order to increase revenue and to achieve and maintain profitability, they must attract new members and retain existing members. They must also encourage Etsy sellers to list items for sale and use seller services and encourage Etsy buyers to purchase items in the marketplace. Further expansion into markets outside of the United States is also important to the growth of their business. Expanding the Etsy community into markets outside of the United States is an important part of their strategy. By listing its securities on a public exchange, the money paid by the investing public for the newly issued shares goes directly to the company, as well as to any early private investors. Therefore, the IPO will allow Etsy to tap into a wide pool of potential investors to provide itself with capital for future growth, repayment of debt, or working capital. By going public, Etsy will be able to issue additional common shares in a number of different ways, which will provide the ability to quickly raise potentially large amounts of capital from the marketplace. Use of proceeds. Etsy will use the proceeds towards working capital and general corporate purposes, including continued investments in the growth of the business. Furthermore, consistent with Etsy values and mission, they intend to use $300,000 of the proceeds of this offering to partially fund Etsy.org, a Delaware nonprofit organization that was formed in January 2015. Etsy.org will be dedicated to educating women and other underrepresented entrepreneurial populations and empowering them to build businesses that regenerate communities and the planet. A portion of the net proceeds would also be used to fund the build-out of their new corporate headquarters. In addition, a portion of the net proceeds received from this offering will be used for acquisitions of other complementary businesses, technologies, or other assets. However, they have no current understandings, agreements, or commitments for any specific material acquisitions at this time. Also, they intend to invest the net proceeds in short and intermediate term interest-bearing obligations, investment-grade instruments, certificates of deposit, or direct or guaranteed obligations of the U.S. government.
Thank you, Lucine. Hi, I am Tatvik. I am going to introduce the major contents of the company's registration statement, which is the Form S-1, as well as highlights of the company's S-1 filing. Form S-1 is an SEC filing used by companies planning on going public to register their securities with the U.S. SEC as the registration statement so that investors could consider the merits of an offering and make effective investment decisions. The major contents of Etsy's registration statement are prospectus summary, which provides a brief overview of the key aspects of the offering, risk factors that present the most significant risks related to this offering, and ownership of Etsy's common stock that make the offering speculative. According to the dividend policy section of the S-1 form, Etsy have never declared or paid cash dividends on its capital stock. The company intends to retain all available funds and any future earnings for use in the operation of its business and do not anticipate paying any cash dividends in the foreseeable future. Dilution section states that in case of investing in Etsy's common stock, investment will be diluted as the per share offering price of company's common stock is substantially higher than the book value per share attributable to company's existing stockholders. The selected consolidated financial and other data derived from company's audited consolidated financial statements show major elements of income statement and balance sheet and could be read together with MD&A. Management's discussion and analysis of financial condition and results of operation gives narrative explanation of the financial statements and other statistical data is presented in order to enhance readers' understanding of its financial condition. Business section of the prospectus gives information on the mission and values, strength and strategy of the company, its community, sellers and buyers, what are the trends in online and mobile commerce, employment, consumption, and in manufacturing. Management section lists the executive officers and directors and board committees, discusses issues related to the director's independence and code of conduct, presents statistical data of the director compensation, narrative explanation of compensation arrangements with Etsy named executive officers, severance and change in control benefits, equity plans are given in executive compensation section. The consolidated financial statements include the accounts of Etsy and its wholly owned subsidiaries. All intercompany balances and transactions are eliminated in consolidation. Financial statements are presented along with the report of independent public accounting firm PwC, which states that the accompanying financial statements, which are consolidated balance sheet, the related consolidated statements of operation, which is the same as income statement, comprehensive income, changes in convertible preferred stock and stockholders' equity, and cash flows present fairly in all material respects the financial position of Etsy and its subsidiaries in conformity with GAAP. The financial statements represent financial information for the last 3 years beside the balance sheet, which includes the last 2 years' information. Notes to the financial statements provide the investors with a detailed disclosure of the major elements of the financial statements according to U.S. GAAP. Etsy operates a marketplace where people around the world connect both online and offline to make, sell, and buy unique goods. Etsy believes that its success mostly depends on the growth and retention of its active sellers and buyers. Etsy's revenue is driven by the number of active sellers and buyers, seller and buyer engagement on cost-effective basis, re-engagement of inactive sellers and buyers, and its ability to maintain authentic, trusted marketplace. As of December 31, 2014, number of active sellers and buyers was 1.4 million and 19.8 million respectively. Enhancement of the mobile features of Etsy's platform is critical to attracting and retaining Etsy sellers and buyers. Sell on Etsy mobile app launched in 2014 helped to raise the number of mobile visits that reached to 53.2% of all visits. Direct checkout is available in 36 countries. Etsy collects and analyzes operating financial data to evaluate the health of its ecosystem, allocate resources, and assess the performance of business. Market revenue of the company increased 38.4% comparing to 2013, primarily as a result of an increase in the amount of transaction fee received and an increase in listings from new and existing Etsy sellers with corresponding increase in listing fees received. Seller service revenue increased by 92.7%, which is really impressive, mostly as a result of increase in revenue from direct checkout services, as well as increases in promoted listings and shipping labels. Increase of marketing expenses, however, is 122.2%, which is driven by an increase in search engine marketing from Google product listing ads, and to a lesser extent employee-related costs resulting from increased headcount in company's marketing team. Significant resources have been invested in Etsy's technology platform infrastructure and plan to invest in innovation to address the needs of company community. Therefore, product development expenses grew by 33%. As of December 31, 2014, Etsy's cash and cash equivalents, a majority of which were held in cash deposits and money market funds, were held for working capital purposes. The company believes that its existing cash and cash equivalents and short-term investments will be sufficient to meet anticipated cash needs for at least next 12 months. However, its liquidity assumptions may be incorrect, thus available finances can may exhaust sooner, make the company seek to borrow funds through credit agreement, or raise additional funds through equity, equity-linked, or debt financing. This slide summarizes Etsy's future fixed contractual obligations as of December 31, 2014. The major obligations are capital leases for computer equipment, operating non-cancelable leases for companies' existing and new headquarters and offices, facility financing obligations, which is portion of company's obligations for the new headquarters that is accounted for as a built-to-suit lease. From 2012 to 2014, Etsy didn't have off-balance sheet arrangements as defined in Regulation SK.
Thank you, Tatevik. My name is Elena, and I will be covering Etsy's IPO process. In my portion of the presentation, I'd like to discuss the general IPO process, SEC comments and associated amendments, as well as issues faced by Etsy during their IPO process and beyond. As many of you already know, the three major pieces of a successful IPO are the red herring or the prospectus filed by the corporation, the roadshow, and then the underwriting of the shares. The red herring generally provides all of the details about the company's finances and their future prospects or intentions, but does not provide the details of the intended issuance, such as shares to be sold and money to be raised. This comes later in the game. One of the biggest and most interesting issues with Etsy's red herring or prospectus is the discussion around their status as a B corporation. In Etsy's prospectus, the fourth risk clearly highlights how important Etsy's B Corp status is to their business model. A B corporation is a for-profit corporation that puts social good as one of their primary goals. Etsy began its B Corporation certification process in 2012 and was nearly finished with all of the requirements prior to the IPO. However, Etsy did not complete all of the requirements or obtain a potential shareholder vote prior to the IPO, thus putting themselves in danger of foregoing the certification altogether. This is an important issue because Etsy's primary platform is that of social change and social responsibility. Therefore, foregoing their ability to become a B Corp would cause them irreparable harm to their reputation and likely their stock price. Etsy waited until 2016 to renew and fully complete their B Corp certification, right before it was due to expire in 2017. I believe that Etsy execs felt comfortable postponing the B Corp certification until post IPO because of the strength of the initial stock price. However, the fact that Etsy waited this long to confirm their B Corp status caused the community to lose some of their love and is thus one of the big reasons for the decrease in post-IPO stock prices. Adina will discuss this issue further in just a few slides. Red herring goes hand in hand with what is referred to as the roadshow. The roadshow is exactly what it sounds like. It's when the company gets on the road to offer its shares to the buyers and see approximately how much money they should expect to raise through their initial public offering. Etsy launched its IPO roadshow on April 1, 2015, with the intention to sell close to 16.7 million shares for between $14 and $16 per share, thus intending an initial capital raise of about 224 to 267 million and a total valuation of 1.78 billion based on its total shares available for sale. Next step after the roadshow is the process of underwriting and actually selling the shares. Once the company finds major sponsoring banks, angel investors, or venture capital firms, their shares will get underwritten by one or more banks. This process is similar to the underwriters we usually hire for our home and car loans, except on a much larger scale. Etsy had two very well-known institutions as their underwriters. Goldman Sachs and Morgan Stanley combined forces as joint book running managers. At the end of the day, Etsy sold a total of over 19 million shares, thus raising close to 307 million in aggregate proceeds, 40 million more than expected during the roadshow. After the initial S1 filing, SEC generally has comments and asks for clarifications prior to accepting the filer's IPO. When an amendment is needed, the company files Form S1/A, literally an amended S1. Etsy received two noteworthy comments from SEC. One was dated March 31st, 2015, and questioned the graphic in the beginning of the initially filed prospectus. The graphic showed the sale figure, presumably Etsy's, growing from 280 to 695 billion. When asked about it, Etsy explained that the graphic was meant to talk about the industry as a whole and not Etsy-specific revenues. The graphic was updated to make this point very clear. The second SEC concern was filed on April 14th and had to do with the method Etsy selected for reporting certain revenues derived from fees. Specifically, SEC questioned the way Etsy reported fees from wholesale sellers. Since the program was new and Etsy was spreading revenue recognition over a specific period of time, SEC was concerned that the period selected by Etsy was too short or could not be defined with significant certainty. Etsy responded that the wholesale fee revenues were too small to be considered material and a restatement was not necessary. After addressing SEC comments, Etsy interestingly brought to light two new material weaknesses. The first weakness was a lack of proper cutoff procedures, thus preventing timely accrual of expenses and preparation of period-end adjusting journal entries. The second weakness pointed to lack of proper internal controls for accounting for certain expenses. In other words, one or very few individuals were performing tasks that should have been separated between various departments. Actually, a very typical problem in startups and smaller companies. Etsy was quoted to say that these weaknesses resulted in a misstatement of expenses in prior periods that were immaterial to previously issued annual financial statements, but in combination were material to certain interim periods, and thus needed to be addressed. In Etsy's final prospectus, Etsy made changes to the financial statements from prior periods. One of the more noteworthy adjustments was a nearly $500,000 decrease in profit for the 2013 fiscal year. In its original filings, Etsy reported 2013 annual income of $518,000, but in its final prospectus, income of only $58,000 was reported. Shortly after the corrections, Etsy told its future shareholders that they have already began making changes in order to prevent future errors. Additional in-house procedures and segregation of duties have already been implemented to address the issues of internal control. Depth of review and communication and coordination procedures are in the works in order to help both internal control and proper cutoff procedures, and more attention has been placed on compliance with SOX. Shortly after its IPO, Etsy faced a lawsuit filed by its shareholders. The lawsuit stated that Etsy did not disclose the possibility that its large volume sellers were not only selling products that were mass-produced, but that also infringed upon already established trademarks. Certain goods were suggested to be counterfeit. The shareholders went on to say that Etsy didn't properly disclose the possibility of this rather obvious issue in their IPO prospectus to protect its high-volume sellers. Etsy denied all charges. However, shortly after the lawsuit was filed, Etsy updated seller policies and contracts to avoid patent infringement and to protect the company if such infringement happened in the future. This lawsuit specifically and other issues impacted Etsy's post-IPO stock movement. Adina will discuss the stock movement along with other issues in her portion of this presentation to follow.
Thank you, Elena. And as mentioned in your presentation, Etsy priced its public offering at $16 a share, valuing the company at $1.78 billion. And closed at around $30, which is almost twice its IPO price. This was indeed a milestone for an online marketplace born a decade prior in Brooklyn, as Lucine had previously stated. As we've seen in Tatevik's presentation, in 2015, even though Etsy's adjusted earnings before income tax, depreciation, and amortization, or EBITDA, increased about 45%, its operating expenses grew 49%, making these rising costs particularly worrying. This caused an extremely poor sentiment amongst the investing community, as well as the fact that the company had failed to meet its earnings estimates 3 quarters in a row, as we see in these two graphs illustrated here. One of the factors that caused an increase in costs was the company's marketing drive to grow business. This increase was about 88%, which more than offset the growth in revenue. So as you can see in the top graph here, although we see a slow growth in revenue, the net income in the end affects the earnings per share. However, all of Etsy's marketing moves appear to be too little too late. Even though Etsy had been around for over a decade, Amazon announced its handmade site and Etsy was losing ground quickly. As you can see in this graph, Amazon's handmade hit Etsy's stock in October 2015. It had fallen below the IPO price of $16 per share and it went down to $13.44. Consequently, if you had invested in Etsy stock from the beginning, you were now sitting on a sizable loss. Amazon's commitment to handmade products had lured sellers away. It defined handmade as entirely by hand, altered, or hand assembled, whereas Etsy had redefined handmade a couple of years back to allow for production by manufacturing partners, turning off some sellers. Fourth quarter of 2015 was looking promising, and the financial results were tracking above analysts' expectations. Etsy's revenue growth, gross merchandise sales, gross margin, and adjusted EBITDA margin had all reflected a slower decline. First quarter of 2016 showed healthy results and a surprise profit. The gross profit recorded at 42.6% higher, the gross margins improved to 65.9%, and EBITDA expanded 18%. The operating expenses grew about 10.5%, much slower than previously noted. So, as of first quarter 2016, Etsy shares traded for under $7. Etsy had earned the title as the worst performing IPO in 2015. However, as seen in the graph and due to the surprisingly positive financial results I mentioned in my previous slide, the stock started to appreciate over the year and is now showing an upward march. Thus, the market responded positively and Etsy saw a 13% increase in its stock price. However, it's still trading below the IPO price. Furthermore, Etsy has announced the acquisition of Blackbird Technologies, a privately held company which has developed algorithms for natural language processing, image recognition, and analytics. Per Etsy CEO, the addition of Blackbird's technology will enhance shoppers' experience by making the search quicker and easier. Etsy expects it will accelerate search functionality, especially on the mobile platform, since approximately 60% of visits and nearly 50% of gross merchandise sales are done through mobile apps. The hope is that this next step will improve Etsy's competitive position against Amazon's handmade stores, or at least in the near term. While revenue is expected to keep growing 20 to 25% a year, the company's internal margin measurements aren't expected to improve much. The company has narrow revenue streams and is still struggling with international and mobile monetization, which will not trigger significant growth. The company's gross merchandise sales are expected to grow considerably slower than the overall revenue growth. Although Etsy's acquisition of Blackbird will bring some improvement, its long-term business model sustainability remains in question. There's a lot of risk in buying Etsy at current valuations. Investors looking to purchase shares in online retail companies could do better elsewhere. We hope you've enjoyed our presentation and we thank you for your time.